Hello and welcome to SME Futures. Today we are privileged to have with us Mr. Ramasubramanian Gandhi, former Deputy Governor of Reserve Bank of India. Mr. Gandhi has been a part of Reserve Bank of India since 1980s. He's seen the monetary policy evolve and change the market dynamics of the country. From gold reserve crisis to demonetization, he's seen it all. Today he's going to talk to us about financial inclusion, the role digital technology is playing in financial inclusion, demonetization and the cash crunch.
It is true that MSME sector as a whole do not get full adequate financial services from the mainstream banking. It is a fact. There are very large factors, historic factors, legacy factors which have resulted. It is not that banking system is not expanding the credit reach to the MSME sector. Continuously the data clearly establishes that year after year the sector is getting more and more credit, but obviously it is inadequate because the gap is very big. The biggest challenge is about typically an MSME sector segment will not have proper documentation of their financial position and their proper documentation of their businesses, which are normally required for a mainstream bank to assess their capacity to pay back the loan. So here what is required is an alternate model. That is where today the greatest efforts are being brought in by both banks and the NBFCs to find out different methods using technology, using big data analysis, how to determine a person's creditworthiness and how to monitor him continuously. So it requires quite a bit of effort. So it is not going to be easy, this one, number one. That is about the availability of them. Your second part of the question was about the cost of the credit for MSME. Credit cost, ultimately the banking and the financial institutions, they are commercial institutions. It is not their money, the money is not for charity. They raise money at a cost from the depositors and they have their own operating cost on it and normal expectation in terms of return. So the cost has to be based on all the cost to the MSME borrowers will have to factor in all these things. There is no question of cross-subsidizing by the banks to charge somebody else heavily or to give commission in terms of deposit to the depositors low so that they will give low cost credit to the MSME. That if at all, if the society would expect that MSME is important and they should be given at low cost, then it has to be a public subsidy to them. You cannot expect the banking system to give that subsidy. So the cost to the MSME, it will be based on the cost of operations, the cost of funds by the banks. That is why the bank had in the recent years was trying to bring the banking system towards cost-based credit. That is MSME, earlier it was base rate, then the recent approach is towards marginal cost based lending rates, so MCLR based. So there now it is a requirement on the banks that every month they have to reassess the cost of their operations, including the cost of funding, which is cost of their own cost of borrowing. As Reserve Bank would be reducing the cost of in terms of repo rate, that will get reflected in the MCLR through the baby. So this process has started on only hardly 1.5 years before. So the legacy reasons, because on the most of the banks, almost all the banks only, their cost of funding, that is especially the cost of deposit, that is not based on this cost of funding exercise. That is based on their fixed rate. That is for 3 years, the typical term loan is 3 years. So that whatever has been contracted by the banks 3 years before, that will get phased out now onwards only. So it requires quite a bit of time for them to reduce the cost of borrowing. Even though repo rates have come down, their cost of deposits have not yet come down fully. So that's why it takes a while for the banks to ultimately pass on the net benefits of reduction in repo rate. It's an exercise, it is a process, it will have to be. Was there an anticipation while deciding which part of the economy will be affected because of demonetisation and differently? So that was definitely anticipated. There is different segments of the economy will be affected differently, and mostly the unorganized sector, the cash-based sector will be affected more. That was known, and if you would recall that Reserve Bank immediately after demonetisation, the next that is in December itself, December 2016 itself, in its monetary policy, it had clearly brought out what is the likely where all which segments will be affected and nothing. So it was not an unknown, it was not an unanticipated negative effect. It was definitely anticipated. The fact, or rather the point that even now they are being affected, that I am unable to relate to the demonetisation. Demonetisation related negative impact was to be there in the Q1 and the first quarter, that's quarter ending December 16 and quarter ending March 17. That was well understood, well admitted, that's fine. But even after that, the rest of the financial year of 17-18, that's a full year of 17-18, if MSME was affected, that cannot be related to the demonetisation. We have to see reasons, we have to analyze the research why they are continuing to be affected. Demonetisation effect afterwards, after March, by March 2017 itself, cash has been brought back to 13 lakh crores out of the 17 lakh crores which was in circulation before demonetisation. So cash was available. One cannot say that cash was not available, continued to be not available, that's why they were affected. And I think that argument cannot hold good. So we have to see different reasons. During that period, if they lost business, why they are unable to regain their business in the later quarters? That we have to see differently. And as we have already seen, quarter by quarter, during fiscal 17-18, economic growth has been improving. Second quarter, third quarter, fourth quarter figures of course, and the third quarter it has reached 7.1%. Previous quarter it was 6.8. So like that, when if general economic activity in the country had improved, if MSME sector was not gaining proportionately, if not more, then reason we have to find somewhere else. We have to find why. When the entire economy is growing, why MSME is not growing? One by study we have one factor could be because MSME sector is one of the large sector which contributes to exports, country's export. So, there are some studies that 45% of the country's exports come out of MSME sector. During the last year, even though world trade was increasing, our exports had not been correspondingly increasing. So we have to find reason why. So either it because international trade it is not happening, either because our cost differential, there is a cost advantage which otherwise we had, that has been eroded. That is one normal theoretical explanation one can have, and we have to find why, where is the cost differential? Is it because our costs are increasing, or our competitors, their costs are coming down? So that kind of analysis it requires a bit of research, but I will not be able to relate it to as if the effect of demonetisation continued even 6 quarters down the line. That is not possible. Both underlying these two, if people are pointing to these, that automatically means that they don't want to be paying taxes. Because if GST has been affected, one can say that GST brought forth new compliance requirement. Certain the procedures clarity was not there, so I took a longer time, and I think that is understood. But that's a passing phenomenon. But fundamentally, if it is affecting them, that means that they don't want to be paying taxes in a normal way. That is what they are after. That is completely a political decision where you want to give greater emphasis. Who is creating employment? That is exactly the same argument is put forth by corporates also. Because big corporates, big factories, they create large employment. MSME is creating large employment. Somebody will say that even though my employment is low, but by auxiliary units which depend upon supplies to me, all of them are getting indirect employment because of my, especially the car companies will always argue that way. So that way, employment creation by businesses is a norm, but there, for that reason they should be supported, they should be given subsidy, or they should be treated differently. That will be a public policy decision. There will be a public policy decision which govern, that will be purely political economy decision. I will not be able to make any comment on that, because that is an altogether different arena. I am not even having a big knowledge over that as well. See, first of all, as of now, at least the information that we have, it brings forth cash not being available in particular pockets. It is not across the country. That is one. And that is also supported by the total value of notes in circulation, which is 18 lakh crores plus. So that's a large sum. That is an amount which was available pre-demonetisation. So now the large sum of cash is definitely available. In some pockets, due to logistical reason, there can always be a situation where by supply vis-a-vis demand mismatch could be possible. That typically we should be able to we should be able to read that where is a likely shortage, because week by week when we monitor the continuous drawal of cash from the banks, from the ATMs, then we should be able to supply adequately or divert more funds to those locations. Sometimes this mismatch happens, especially when we have always seen that whenever there is election in any state, cash demand in that state have always been more. There are some example like that. So why it has happened in those locations, that's a question of study. But how to manage it? Transfer surplus cash from where it is surplus, it is not needed that much, to the needy location. That kind of diversion should take place. Typically, the criticism which has come is that ATMs are running dry, cash is not available in the ATM. That is a different story as compared to saying that even at the banks, cash is not available. Cash is available at the banks, not at the ATMs. Why? Then maybe the reason will be different. Here the reason, perhaps I understand, because I don't have much of a detailed information. I am no longer in office, so I don't have one. But it's my surmise, assumption is that ATMs have specific bins or drawers for different denominations. So at a particular time, in particular location, one denomination, if it is not available, that tray cannot be refilled with another set of denominations which are readily available. Suppose 2000 is not available, they cannot fill 500 notes in that drawer. So it automatically means that ATM, now the capacity of that ATM has come down. With the 2000, the total value, if it is 5 lakh rupees, with the absence of that 2000 rupee notes in that one, the straight away the total availability of value of notes available in that comes to 1 lakh. That 1 lakh rupees will be withdrawn very quickly. So that's why ATMs are running dry. First of all, fintech companies are not financial entities. They are technology entities. So Reserve Bank or the financial system doesn't regulate who are not financial entities. There is no requirement also, because they are not touching public money, whether in terms of deposit or in terms of investment, shares, mutual funds kind of thing. It is not. So there will be no justification for a financial sector regulator to regulate a fintech company just because it is offering its technology products and services to the financial sector. That is not possible at all. So fundamentally the question is wrong, that why Reserve Bank is not regulating fintech company. So fintech company, so long as they are offering is only technology based services, there is no question of any regulation. Now the second question, the second part as you asked, is about why they cannot be given some encouragement. That is a different story. That is, your fundamental assumption there is, you are making is that these fintech companies are supporting efficiency of operations by the financial institutions, in that case, why not help them out to bring out money? That is a commercial proposition. There, why as a regulator should be stepping in to develop or support a commercial institution. Public policy can look at differently. That if suppose it is creating more and more of jobs and export earnings, those kind of thing, then public policy may step in to support them differently. That's a different question. But elsewhere, like in UK or in Hong Kong and Singapore, this fintech support from the financial regulators have become the, as you said, the buzzword. That they have taken it in a big way. That, in my opinion, that is primarily because all these three jurisdictions, UK, UK, Singapore and Hong Kong, they are all small island-based, city-based or a small nation. There, the employment generated by this financial sector, that fintech group, is critical for their existence, to be continued in their further. That is why there the government, the public policy is looking forward or already has trying to help them out in a big way. It is not the case in other countries, whether it is India or anywhere else. And that is one. So it's a commercial activity. The commercial activity has to be based on commercial considerations rather than what a regulator, if at all, can think about is that these fintech companies will require assistance, data, then testing out the locations, that what we call that test lab kind of arrangements. There, the regulator perhaps may be able to facilitate that. That's the one, if at all, will be of useful to the segment, not any other. First of all, FRBM Act is a central act. State governments are not bound by that act. You have to understand that. FRBM, each state government is supposed to have its own arrangement, its own legal act. Expectation is that we want state governments also to come forward to have fiscal discipline. That is there. But the act per se is for the central government, number one. That I will clarify. Now, when we say the central government, 2000, when they started this act came into effect, consistently year after year governments were following. It was not the government was not following the path which was prescribed. When deviation took place, when internationally when there was general financial crisis, then obviously governments will have to increase the public expenditure, because private expenditure was or investment expenditure was trending down. So public policy requires that they should be expanding their. So that time they had to go away from that. Now, current by last year, last fiscal only, there was a slippage in the fiscal. Otherwise, government was following. So how do you say that here and there exceptions are there, but otherwise the intention, not only there's just intention, year after year, conformation to the approved or declared budgeted fiscal discipline, they were following. So en masse we cannot say that government was not following fiscal discipline. Deviations had been there, admitted. But that's what is provided for in the Act, that there will always be occasion that there may have to be deviation. State governments, as I said, that's a yes, we would expect state governments also to have fiscal discipline. That's why the previous Finance Commission gave some extra weightage. Whichever state governments are having fiscal discipline, the central allocation of resources were more to them. There is the particular formula had been prescribed recommended by the previous commission, which was approved.